And then moving more towards kind of a regulated infrastructure partner, we serve RIAs and the RIA platforms that are bringing folks like Franklin Templeton, Eaglebrook, other institutional counterparties that want to provide direct access for their clients to hold digital assets.
This content is brought to you by VeChain, which is a leading enterprise-grade Layer 1 public blockchain spearheading a digital revolution from a sustainable, highly scalable smart contract platform. The VeChain blockchain has many unique features, which makes it an ideal choice for Web3 applications. VeChain is working with many great enterprises such as PwC, Givenchy, BMW, and Walmart China. Most recently, they partnered with the Boston Consulting Group to build a revolutionary decentralized application ecosystem. I'm a big believer in this project. I have been since 2018. I've been a VET token holder for years. And this blockchain is highly scalable, great with security and speed, and it has low energy consumption. If you'd like to learn more about VeChain, please visit vchain.org. Link will be in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Nathan McCauley, who's the co-founder and CEO of Anchorage Digital. Nathan, great to have you on.
Thanks so much for having me. Happy to be here.
Nathan, I'm excited to speak with you because I followed Anchorage for many years, and you guys are certainly one of the top tier custodians out there. And got a lot of questions about your new services and much more. But before we get there, tell us about yourself, where you're from, and what's your professional background.
Sure. Thanks for asking. So, excited to be here. It's been following your podcast for a while, so it's a pleasure to be on. I guess my name is Nathan. I grew up in somewhat small town, rural Indiana. Everybody around me, their parents were farmers or factory workers. That's kind of the game in rural Indiana. The town I actually grew up in for a little while there is actually called Economy, Indiana. Which I always think of that as kind of a funny fact now that I'm working in crypto, working in finance, having grown up in a little town called Economy, Indiana. But yeah, just got my start there, and the internet really unlocked the ability to connect with people. My town only had something like 150 people, so it was nice to get to connect with a broader community online, whether that was through online message boards or MMOs like various MMO video games that I played growing up. Really got me to connect with more of the world. And then as I went off to college, wanted to start my career, I really wanted to get into tech. And so figured out that where they were building the tech was San Francisco. And so got myself hired at a number of companies out in San Francisco. And from there, really focused in on software security, compliance, fintech, all of which came together very nicely when it came time to start Anchorage later on in my career with my co-founder, where we looked to build an institutional custodian for holding digital assets for institutional investors.
Now, along your journey towards crypto, what was your first encounter with Bitcoin, and what was your aha moment?
Sure. So it's funny. I have to admit that I was a little bit late to the game on Bitcoin, not for lack of hearing about it early on. I was one of the places I worked at when I was in the tech scene in San Francisco was at the time a very small startup called Square. We made a little device that plugs into mobile phones, allowed people to accept credit card payments. At the time, it was mostly for people buying and selling, say, furniture on Craigslist, maybe small coffee shops, things like that. Really saw Square grow monumentally while I was there. Wish I could take all the credit for that. I can't. I was just a member on the team there, but had a really fun time. And it was during that time that Bitcoin really rose to prominence. So lots of people there. Of course, we were in payments, we were in fintech. Lots of my colleagues looked at Bitcoin and thought it was interesting. I thought it was interesting from the cryptography perspective, but because of what I would say was my US-centric view on it, I didn't really perceive the notion that we needed an alternative currency. And so have to admit that I missed the point of it early on.
Mm.
What I did talk to a lot of folks about at the time was, man, wouldn't it be cool if software applications could run on the blockchains? Instead of just having decentralized money, could we have decentralized code, decentralized infrastructure? And so some amount of brainstorming about that early on. And so I was very pleased when I turned away from crypto for many years, turned my gaze back on it, and found that Ethereum had come out. And exactly that idea had come to fruition, this idea that you could do decentralized applications. That ended up being where I really started to get more interested and see, oh, hey, this is not just a currency thing. This is an everything thing. All software can go in this direction. All services can go in this direction. It can actually solve a lot of the problems for us. And so that's really what piqued my interest even more later on with crypto, was the rise of Ethereum, the rise of decentralized applications.
Yeah, absolutely. So, what was the genesis of the idea to start Anchorage? Did you see a need in the market? Because custody, absolutely so important, right? It's a pillar for many asset classes to have proper custody. What was the genesis of the idea behind it?
Yeah. So the general purpose idea is Diogo and I. Diogo is my co-founder here at Anchorage. We were working on Docker. Docker at the time was and is a cloud computing technology, and we were working on security for that to really bring great security to everybody deploying into cloud environments. Was AWS, Azure, GCP, kind of across the board. And one of the things we saw was, particularly in 2017, was the rise of Bitcoin's bull run, in a sense. Really, one of the first bull runs that really kind of catapulted crypto and Bitcoin into the public consciousness at large.
Sure.
And the market reality that you saw at that point was that was entirely a retail-driven phenomenon. And so if you take a look at any other asset class in the institutional space, what you find is upwards of certainly more than 50%, sometimes 60, 70, even 80% of a particular asset is held by institutions that hold it. And it tends to be a relatively smaller overall market share that is held by individual investors. Crypto had the reverse of that. They had huge amount of retail interest, very little institutional interest, and that performed the thesis for why over time bringing institutions in would be super important.
Yeah.
On top of that, you start to look at, like, okay, what does it take for institutions to come in? And the starting point for them is how to hold the asset.
Yeah.
They can't even get started in the asset class if there's no way for them to hold the asset. They need software security, institutional counterparty, and regulatory certainty, all combined into a single package. And that formed the basis of the thesis early on for Anchorage. Add on to that the fact that Diogo and I had a lot of interest from potential people in the ecosystem, the real early adopters that were starting to invest in digital assets, reaching out to Diogo saying, hey, can we custody these digital assets? How can we do this? How can we do this better? And got a real sense there that not only was there a kind of theoretical possibility, like I laid out, of institutions will adopt, they'll need custody, but also a market reality at the time that people needed it, and needed it immediately. And so that is really kind of the genesis of the idea, is that understanding of the market structure and frankly, just a market demand that people wanted the service back then.
Sure. Can you tell us a bit about Anchorage's different services and what makes it unique from other custodians in the market?
Sure. So certainly at the inception of the company, the prevailing market sentiment was this idea of cold storage. The basic notion of cold storage is take assets, put them on a computer, turn the computer off. That's the only way to be secure. Basically viewed that as, roughly speaking, what you learn in Security 101 in college. On the first day, you learn that's the only way to build a secure system. And then the entire rest of your education is how to actually build usable secure systems. And so the state of the art was put it on a computer, turn it off. So this was like, okay, we have a real opportunity to improve on the tech that underlies this, and we differentiate ourselves to this day about how institutions can get very fast access to funds. This manifests in a lot of different ways, so they can trade and settle immediately. They can access staking services. They can access DeFi. They can work with NFT marketplaces, all without having to have this notion of taking the assets out of cold storage, making them usable, and then actually doing the action. All of your assets should be accessible to you whenever you want them. And in doing that, you can actually build systems that are even more secure than cold storage by tying in biometric authentication, tying in a whole host of authentication metrics that you can bring into the ecosystem. And so from that custody base, which we've grown exponentially over the last 7 years, we've been able to add services on top of that. And so trading services, we're very popular trading counterparty for some of the biggest institutions in the world. Settlement services allow them to move assets around. A huge amount of the assets that are held on our platform are staked. And so we have the staking capabilities across a whole variety of different assets. And the story doesn't stop there. We're continuing to add and scale up and add more services as clients demand them.
That's amazing. And if I'm not mistaken, you guys had gotten a license from the OCC a couple of years back, right? A few years back, which allowed, I think, I can't remember if it made you a digital bank. Is that correct?
Yeah, that's right. That's right. So early on, I was talking about what it takes for institutions to come into the digital asset space.
Mhm.
The way we thought about it when we started the company was if we um, combined the solution to two impossible problems, we would have a very valuable offering in the market. That first one was a fundamental advancement on the state of the art, which was previously cold storage. What if we could do things better so that people could access the assets at any time?
Mhm.
Hard security problem needed to be solved. We solved it. The second impossible problem we wanted to solve was how do we get the whole thing regulated? How do we act as a what's called qualified custodian for digital asset investors? When you're investing other people's money at significant enough scale, you have to follow a rule called the custody rule that is enforced by the SEC. The SEC says if you're over this amount of assets you're managing for other people, you must hold your assets in a qualified custodian. Qualified custodian has to safely hold the assets and do that in a regulated way. There's a number of ways to do that, but the most unambiguous and clear way to do that is to get a federal bank charter. And so many years into our process, we were actually granted the first and, as of today, only federal bank charter allowing holding of digital assets. And so that was issued by what's called the OCC, Office of the Comptroller of the Currency. It's a sub agency, I suppose, of the U.S. Treasury.
Mhm.
And so we remain the only federally licensed, federally overseen national bank that holds digital assets for our clients.
Wow. I know there has been, and we're going to talk a bit about it later, just a lot of uncertainty in the market, a lot of pushback on maybe certain legislation and things that have been put forth. Um, if I'm not mistaken, I saw that some folks are trying to push back on the OCC handing out some of these approvals or licenses. Have you encountered any issues with that over the years?
So we've found the OCC to be a very fair regulator and a very um, informed regulator, I would say. They do not take their responsibility lightly. When they oversee a bank, they hold that bank to the same standards as they hold every other bank to. And so, what we have been working on for the past several years since we've gotten the charter is continuing to advance that relationship, continuing to mature our processes while the federal agencies mature their understanding of the digital asset ecosystem. And so, we have found a very fair and thoughtful broker in the OCC and in how they oversee us. I think it makes a lot of sense as you start to scale up the amount of assets in a platform, as you start to scale the kinds of use cases that institutions want to get into. Having the transparency and the finality that comes with blockchains on top of federal oversight from a regulator like the OCC really gives you the best in breed level of trust that a custodian can provide. And so you take that transparency that inherently comes with the blockchain, plus the same level of oversight as the other large banks in the country. And there's really no place that you can get as much trust in the custodian as you can get from Anchorage Digital Bank. And so this as a trend, we being the first, we expect that we will be the first of many to get this charter and to work in this place. For now, we're the only ones, but we think it's a very positive trend and expect it to continue over time.
For sure. Yeah, I mean, we're seeing Congress and these folks are all working towards passing legislation. Obviously, there's still a lot of uncertainty and confusions with many government agencies. We're going to talk about the SEC later and so forth, but it is what it is. But to your point, the OCC seems to be, they understand the landscape and are working with the industry. Tell us about the type of clients that are working with you. I don't know if you can name drop, but maybe you can give us the categories. And are you custodying any of the Bitcoin ETFs? Hi, everyone. Pardon the interruption. I'm Tony Edward, the founder and host of the Thinking Crypto podcast. I have a huge favor to ask you. If you haven't subscribed as yet on YouTube or the podcast platforms, hit that subscribe button, hit the thumbs up button, hit the notification bell on the YouTube platform, and on Spotify or Apple or wherever you get your podcasts, please leave a 5-star rating and review. It supports the podcast. It allows me to bring great quality content to you. Thank you for your support, and I'll let you get back to the content.
Good question. Good question. So we serve some of the largest institutions globally, the largest holders of digital assets. By way of categories, I'll start with kind of early adopters, venture capital funds, hedge funds, anyone who was early to the space, wanted to invest in digital assets, whether that's taking positions in Bitcoin and Ethereum or across the landscape, investing in the new protocols that are coming out like Aptos, SWI, Starknet, other kinds of protocols where investors want to participate in those. So we really like serving the investors in the ecosystem, but we also like serving the innovators themselves. So the blockchain protocols, when they launch a new protocol, often their entity and their foundation ends up holding a decent portion of the overall circulating supply, and so we serve as a custodian for them as well, and that's a big area for us. On the more traditional side, we serve entities like sovereign wealth funds. So some of the global sovereign wealth funds that want to take positions in digital assets, we serve their use cases as well. And then moving more towards kind of a regulated infrastructure partner, we serve RIAs and the RIA platforms that are bringing folks like Franklin Templeton, Eaglebrook, other institutional counterparties that want to provide direct access for their clients to hold digital assets. In terms of the crypto ETFs, it's a very exciting area where we don't have anything to announce today, but suffice it to say that we are a very natural partner for any crypto-based ETF looking to roll out products in that area, looking to do things like custody of, say, Bitcoin, or over time, one of the things that's very interesting is that our federal bank charter allows us to participate in staking. And so the fact that it allows us to participate in staking, we think will be a very meaningful unlock for future growth for the ETFs that might want to have assets in the ETF that incorporate a staking component there as well. And so we expect the ETF landscape to be a big part of our growth over time.
Let's talk about staking for a second. I'm very fascinated by that because on multiple levels, I personally stake crypto. There's a lot of retail investors who stake as well. Are you seeing a growing demand in institutional staking, and are they viewing it as a passive income or some sort of yield that they're earning over time? And are they adding to that pool? Let's say it's Ethereum, right? That they see that, hey, we can hold this asset. It's going to appreciate in price over time, but we can also earn yield off of it via staking.
It's a really good question. I think I can't necessarily speak to everybody's um, particular interest in staking and why they're participating in staking. There's certainly folks that want to participate in staking for exactly what you're talking about, because there's a yield component that comes along with the staking. There's others that view it as, hey, this blockchain has an emission schedule, and if I want to keep up with my ownership percentage of the total supply, I need to participate in staking in order to make sure that I am not diluted of my total share. And so the individual views on which way to think about that vary. And I think everybody has their own different investment thesis and reason for participating. What I can say unequivocally is that staking is a growing business for us. We've seen quarter over quarter growth in terms of number of units and overall dollar equivalent value that is participating in staking in our platform. Right now, I think something like 1/6 of our asset base participates in staking. And so we have a very sizable amount of assets in the platform that are being staked. A lot of this is Ethereum. A lot of this is other assets like Solana. But then a bunch of the new assets that have launched over the last several years, they tend to launch and want to participate in staking from day one. And so there's a really healthy mix of different assets in the platform that are participating in staking.
Tough question for you, and I'm not sure if you can speak fully to this, because I know there's many complications to this. If an asset, a crypto asset, and this is a big debate happening with the SEC, CFTC, and much more. We're waiting for clarity from Congress. But if an asset, let's say, is classified as security, does that affect your ability to custody it?
So there's a lot of market participants that need to devote a lot of careful consideration to whether an asset is a security. The good news for us, at least, is that national banks do not. National banks are unequivocally allowed to custody securities. And so when we are custodying assets, we do not have to decide, hey, is this a commodity? Is this a security? Is this a token? National banks are given the ability to custody across the board. And so we utilize that fact to custody a wide range of assets without necessarily, on the custody side, needing to be concerned whether it's a security, commodity, or any other such type of asset.
Got it. All right, let's talk about the big news, Porto, the institutional self-custody wallet. Tell us about this, and what are the capabilities?
Sure. So Porto is a great addition to our product suite. What we've seen over the lifetime of Anchorage is that our clients want to do more and more with us, with our tech, with our platform. As I mentioned earlier, we built our tech in a way that allows it to be very flexible in order to move assets quickly, to participate with those assets. And increasingly, what clients want to do is they want to take their assets and utilize them on chain for various activities that they would like to do.
Yes.
So those on-chain activities might be participating with various DeFi interactions. They might want to participate with a staking protocol. For example, one of the use cases that some of our clients have wanted to do is to participate in restaking type opportunities like our developing. Sometimes clients want to participate into NFT marketplaces and put bids out there for some of those kinds of things. And so what you find is a whole host of use cases that are really frontier use cases that clients would like to participate in. And the best way to do that tends to be to take the assets yourself, put them into your self-custody system, and then within that self-custody system, utilize the platform capabilities that allow you to participate there. And so really what it is doing is allowing the clients to, with a familiar set of tech interfaces that are very much distinct from our custody system, for example, and for the kind of regulated entity systems, but still feel familiar in a way, allow them to access the full range of things that they would like to do with their assets. And so that's really the raison d'etre for Porto, was serve the client's use cases, allow them to have the flexibility to use their assets in the way that they would like to, and really free them up to access the whole ecosystem of activities and opportunities that are available within the crypto ecosystem.
Now, as a retail investor, I use hardware wallets and I have some software wallets that I use as well. So, and I have to back up my private keys and make sure those private keys are safe and secure. Tell us about the process of the private keys for those institutions. Are you helping to custody the private keys, or is it split? What's the metrics or the mechanisms behind that?
Good question. Good question. So, what institutions want, and whether it's in a custody system like Anchorage Digital Bank or a self-custody system that puts more of that control in their hands, ultimately what they want is reliability. They want to know that they have their assets. They want to know that the assets aren't going to somehow disappear. They aren't going to make some sort of a mistake and lose access to their assets. And so the core premise of Porto at its inception is provide the same level of security and the same level of trust as is possible when using Anchorage Digital Bank for these clients. And so what we provide is a very similar security architecture, security mechanisms, things like access to the keys using biometric authentication with hardware devices that you have on the client side, and then backed by keys that are backed up by Anchorage and allow people to make sure that they have access to those things. Now, notably, we do not have any access to their assets. We are not able to move their assets. That is only possible through their infrastructure, and they must be involved in order to be able to do that. But the set of trade-offs and constraints that we allow them there allow them to have, say, key recovery, where they can migrate the keys if they want. They can recover the keys. They can recover the keys without needing to interact with us. And so they have a whole set of frameworks and options that are available there while maintaining the same level of trust and reliability that the clients have come to expect.
I want to talk to you about like the industry and custody, because obviously we saw what happened with FTX and commingling and all kinds of nonsense, right? And then we're seeing certain bills being brought up by different sites. Like I saw California put out something for proof of reserves and so forth. Do you see a rise in custodial services around crypto being used by more governments and so forth, who are going to eventually put Bitcoin in their treasury and so forth, pension funds and endowments and so forth? I would love to get your take on how the custody landscape essentially has changed since because of the big FTX collapse.
Sure. Yeah. So I think one of the ways to think about this is that crypto in many ways has gone through cycles. And one kind of interesting way to think about it is that it has gone through cycles on a accelerated path relative to, say, the broader markets. And so you could look at some of the exuberance that happened in 2017 as roughly equivalent to the stock market boom and bust cycle of the early 2000s. And I like to liken everything that happened with FTX to the set of issues that happened in the traditional financial markets around 2008. Some amount of fraud, some amount of over leverage, and that causing some failure to some institutions, and a really hard lesson for many people to live with. And so what you've seen with FTX is I think, healthy response to think more about counterparty risk, to think more about segregation of duties, to think more about regulatory oversight combining with crypto transparency, all of those things coming together, leading to a renewed interest in conservative, thoughtful players like Anchorage. And so in many ways, the industry suffered a big blow overall when it came to the FTX issues that happened there. But in the rebuild there, that has been beneficial, I would say, in many ways, to the players that are trying to do it right, like Anchorage. The players that are trying to say, hey, we want to never commingle clients' assets, always keep them on separate ledgers in separate blockchains, so that when you're holding assets at Anchorage, not only do you get a statement from us that says, hey, you have 20 Bitcoin, but you have a wallet address where you can look at your wallet address and say, hey, that's my wallet address. I know that my particular Bitcoin is held there, my particular Ethereum, my particular XYZ token. And so that additional level of transparency that we provide, where you have segregated wallets on chain, also being overseen by a federal regulator, there's no way to get more transparency and clarity than this. And what we're going to see over time is more of the world's institutions will move to this model, where the counterparty risk is so greatly reduced because of that federal oversight, because of that on-chain transparency. And I do think that, yes, over time, we already serve some sovereign wealth funds who have decided that they want to allocate into crypto, and whether that's their treasuries or, as you mentioned, pension funds coming in. Over time, I think there will be a whole host of this, and some of that will come from direct relationships with us, like many do today. Some of it may come in through the ETFs, which we will be a custodian of, and it'll be a good variety of ways to access the crypto rails.
I'm assuming the answer is no to this, but can you tell us some of the names of those sovereign wealth funds?
I cannot. Kudos for asking, but we have to be thoughtful about our clients and their positions.
I gotta ask, yeah, and it's out of genuine curiosity, because everybody wants to know, who's investing and so forth, especially from the sovereign wealth fund standpoint, because you don't get too many headlines and things along those lines, about those folks. So anyway, I thought I'd ask.
Fair enough.
What's on your 2024 roadmap?
So this year we want to really build on top of the strong custody base that we've gotten, and the general trend is to do more things that our clients want us to do. So clients are asking for more advanced trading capabilities. We're going to help them with that. Clients have asked for easier access to fiat rails and all things around stablecoins. So we're going to do more of that. Clients have asked to be able to hold assets at Anchorage and not have to move those assets to exchanges in order to trade. And so being able to do off-exchange settlement, where you hold your assets in Anchorage, but then still get the ability, buying power, whether it's at OTC desks, market makers, or crypto exchanges. Clients want access to that. We want to continue to help out the RIA ecosystem. It seems like there's been a acceleration in that area, driven in many parts by the crypto ETFs. Right now, you just have Bitcoin ETFs, but many of the RIA providers want to provide access to more tokens for their clients, and so we're going to be integrating with them. And even more, some things that I can't necessarily announce yet, but it's going to be a really big year for us, and so we're looking forward to that.
Follow-up question on the item where clients want to not have to move their funds out of custody, whether it be OTC or trading and so forth. Are you planning to build like your own trading desk or partner with an exclusive exchange? Or I don't know if you can share any details, or it's under NDA for now.
Yeah. So we do have a trading capability that is built into Anchorage at this point. And clients that are holding assets with us are able to trade. We go find the best price for them out in the ecosystem, and then allow them to execute that trade and then settle directly into and out of custody. That doesn't meet all of the client's needs, and so sometimes there are particular features of other OTC desks or exchanges that they'd like access to, without having to take counterparty risk to actually put their assets on, say, that custodial exchange or that dealer. And so what's needed there is really a kind of a tri-party solution to allow people to keep assets at Anchorage and have the counterparty know that there are assets there that are available to them in order for them to trade. And so we'll be looking to expand in that area over time.
Oh, that's awesome. Let's talk about the crypto market at large. I would love to get your thoughts on the Bitcoin ETF launches and the inflows we've been seeing. Pretty incredible, and it just seems like there was pent-up demand for Bitcoin. What are your thoughts on the performance?
I think it's really just the beginning there. This is a asset that has continually attracted more and more people over time. The general trend is, as you learn more about Bitcoin, you get more interested in it and want to participate in it. Not just because of the price appreciation, but because of the deflationary nature of it, the fact that there's a fixed supply. And so I think what has happened there is a packaging in the Bitcoin ETFs that has allowed more people to more easily express that opinion, whether that's through their existing brokerage accounts, existing institutional offerings. And so that is a area that will continue to grow, and will basically only continue to grow over the next really several decades. I think the cascade there is that the Bitcoin ETF is just the first of many, and that we should expect that to be an infinite game, not dissimilar to the way that traditional asset ETFs are. There's an infinite number of combinations that come together in those markets, and so we should expect this to be a very healthy ecosystem that develops over time, and we're just in really the first inning of what that looks like.
For sure. I know everybody's asking about the Ethereum ETF and if we might see that this year or next year, and obviously we got still some uncertainty from the SEC and the CFTC and so forth. Do you think we see that this year or maybe next year?
It's a good question. If I had a crystal ball that knew the answers to these things, I would be running a hedge fund instead of a custodian. And so the core premise of running a custodian is you don't know, you can't predict the price, you can't predict anything except that the general trend is positive for digital assets, and everyone's going to need a custodian there. And so I'll avoid making any kind of prediction, but to say that I'm a supporter of the idea. I think the faster that we can get more of the investing public access to these assets, the more fair of a situation we're going to have in the digital assets ecosystem. The digital assets shouldn't only be available to early adopters or those who can figure out all the complexities of private keys and crypto-specific exchange accounts. So the crypto ETFs as a wrapper that gives the financial outcome to more and more of the investing population is a undeniable public good. And I'm very, very excited to see more people get access to the investment opportunity here.
For sure. Let's talk about NFTs and tokenization. And is Anchorage custodying NFTs for any major brands or institutions? And I'm assuming you're set up to handle tokenization of real world assets as well.
Yeah, good questions. So we are an NFT custodian for a number of the larger brands in the space that are working in the NFT ecosystem. So we don't have any disclosable relationships there, but we do hold NFTs for clients and help them with that, whether it's people that are using us as a infrastructure provider for, say, their buy and sell, all the way to say NFT funds that want to hold assets with us and participate in the price appreciation of those NFT collections. On the real world asset side, this is a very interesting area. I have a little bit of a, I guess, contrarian view on this, or maybe non-standard view, that there is actually a very, very popular real world asset that most of the crypto industry participates in, which is USDC. USDC stablecoins generally, I think, are the first proof point of real world asset tokenization. And so we do a lot with stablecoins, and we're going to continue to do a lot with stablecoins. But it's an area that I think can grow over time. You have a lot of positivity around the space, particularly around asset tokenization. Some of the recent announcements, say from BlackRock, looking at tokenizing effectively treasuries in a sense. And we are a partner to them on that, and we are custodying some of the BIDL token for some of our clients who have looked to take a position there. And so we're going to continue to grow in that area, and excited to be an enabling infrastructure player for the real world assets tokenization movement.
Yeah, and I'm very curious about the future of that, and more so because maybe my background, but real estate, like if a building in Manhattan is getting tokenized and I can buy a chunk of those respective tokens, and then have them at a custodian like Anchorage, and then trade them or borrow against them or whatever it may be. I'm curious about that, and it may be artwork as well, having certain rare art pieces of art tokenized. So I know BlackRock is looking to do funds and all that. Not really. I like, for me personally, or every different flavor for everybody. But I'm very curious about the real estate tokenization and what that would look like.
Yeah, I think it's a really interesting thing to somewhat reflect on the the things that we can own as investors right now. So none of us blinks an eye when we're able to own a small fraction of a publicly traded company.
Mm.
You and I are very easily able to own a portion of Tesla and participate in the rise or fall of Tesla. And for reasons that aren't entirely clear, that's less possible with real estate assets.
Mm.
And so the idea that real estate assets could be fractionalized and have more widespread participation in that area. Real estate is one of the biggest assets in the country. There was even early in the country's history, there was even an idea that the dollar should be backed by real estate, and it was the first real world asset, real estate, real world asset. And so I think it's a great trend. I hope crypto is an enabling mechanism for more widespread ownership of real estate. And so yeah, I would love to join you in that endeavor once it's more readily possible.
Um, I know you probably can't answer too much about this, but I'll ask you anyway. But is there anything in addition to the BlackRock, what they're trying to do, investing funds and so forth? Any other information you can share there? Are they looking to tokenize other things? And whatever you can get, details you can give there.
Sure, great questions. So I don't have any particular insight there versus what you can see BlackRock saying publicly, even Larry Fink saying publicly that they have a big strategy on their side to participate in this area, and so it looks like it should be an interesting area to pay attention to over time, but I don't have any particular insight that I can share there.
I hope you understand. I got to ask because the users, the
Of
people who are
course.
going to listen and watch, you like, ask him about this. BlackRock.
Yeah.
Everybody wants to know what's happening
Yeah.
behind the scenes. All right, I got some wrap up questions here for you. First is, if you could create your own metaverse, what would the theme be?
Yeah. So this is an interesting question. I like metaverses mainly in the sense that they can spark the imagination about what we can do in the real world. So most interested in how they can participate in the real world. And so my view of this would be combine a metropolitan city like a San Francisco or New York with the architecture and taste of Barcelona,
Mm.
in the commitment to beauty that Barcelona brings, with a healthy dose of rural areas. And so if I can be out on a rowboat on a pond and then head into a beautifully designed city, that would be my ideal metaverse, mainly so that it could spark the imagination so that we can see those things come into reality someday.
Oh, that's awesome. And I got some wrap up questions here. Oh, excuse me, rapid fire questions.
Sure.
First is favorite food.
Favorite food, I would have to say I love grilling, and so a steak grilled to perfection along with a potato, some corn on the cob. That really that's my sweet spot.
Favorite musician or band?
Lately, been listening to a lot of Boston.
Hmm.
I think they've always done a really good job. It released one album a decade. Really took their time on it and did it right. So I'm a big fan of Boston.
And favorite movie?
Favorite movie? I loved Mad Max Fury Road
Yeah.
for just its commitment to a theme, the beauty that was in there. It wasn't trying to have a big plot. It was just trying to do exactly what it did and did it so well. And so big fan of Mad Max.
Yeah, me too. I love the originals as well with Mel
Mhm.
Gibson. Those were great as well. Favorite book?
Favorite book. Lately, I've been focused on this particular book called Timeless Way of Building.
Hmm.
And it's a book all about how to um, basically the idea is that like architecture should be designed to um, encourage particular activities. And so that a place gets defined by what happens there more than the building itself. And so designing buildings so that they really focus on what happens there, and the implications of that, even beyond architecture, are really interesting to me these days.
Mm. And when you're not working at Anchorage, what are you doing for fun?
So gardening, playing with my children. I've got three kids. Reading books, playing chess. Few hobbies there, but a lot of the time goes to spending time raising my kids.
Awesome. Nathan, great chatting with you. I'm looking forward to the future updates around Anchorage, and we'll love to have you back on as things progress. Thank you so much for joining me.
Thanks so much, Tony. Appreciate it.